welcome back to the RationalInvestor.com's Broiler Chicken Show. Back. Good morning. Happy Sunday. You like that one, Kevin? Hey, Shane liked that too. I think I should go on the road. We got a band to put together here. You like my buck box, eh? Happy Sunday. Hey, and we're live on YouTube. Party. That's good to hear. Good to see. Hello, YouTubers. No idea what we're going to talk about today. Do I ever? Hubs is laughing out loud. Hey, right on. Did I get milk to come out of his nose? That's the question. Everybody liked that intro. Maybe we'll do a little recording and tea. Oh, I hope it didn't burn. Anyway, good morning, people. If anything, I sit here, especially, on the weekends, things seem to calm down a little bit. The grown-ups are, obviously away. You can see price volatility coming out of crypto. And the altcoins, the party of the early to, I guess, 2000 teens. We'll probably look back on it as a phenomena of the teens. A lot of the space has obviously calmed down and has gone relatively quiet. So it's and with the broader market and obviously world health concerns and stuff, it's going to be a challenge here for those people that, keep in mind, I've been at this crazy game for 30 years. 30 years! I've been through periods like this. I remember 2000, 2001, 2002, following the dot-com blow-up. Basically my retail book at that point blew up. Right? I was a young broker. That's usually what happens to young guys in the business. And then the transition into the next economic cycle. It took, a calamity like 9/11 to sort of change people's perspective, get the conversation changed. I wouldn't be surprised if, and then, 2008, and most of this audience, that's kind of where you started to really pay attention. Was the last financial asset crisis, and of course a lot of people who were interested in Bitcoin. The whole idea was that maybe we can somehow opt out of the system because it seems like it's awfully rigged. So I actually, in the TRI lounge this morning, I was even commenting, people are commenting about the South Koreans and how they seem to have a pretty solid handle on attacking this current health crisis. I think they're going through like a second wave, if you will, of the coronavirus. But the general commentary on the site was people are pretty impressed with the way that they're handling the situation. And as sort of a flashback, I remember distinctly through what was called the Asian contagion. Back in 1997, I think, 1998, which was really nothing more than the unwinding of over-leverage within the Asian currency markets and the Asian markets. It was, there's a bunch of a backstory. The markets were artificially bid up as the Brits were going to hand Hong Kong back over to the Chinese, and the Chinese wanted to make sure everything was tickety-boo. And as soon as that event happened, they just pulled the carpet out from underneath the market, and the whole damn thing collapsed. But a really great anecdote of sort of South Korea was, as their currencies were collapsing, I remember distinctly watching on the major news outlets, CNBC and stuff like that, Korean citizens running out into the streets and just piling up all their silverware, all their silver, tea services, anything they could possibly pile into the streets to defend their currency because all of the Asian currencies were collapsing following that Hong Kong transition event. And it was just it always left such an interesting historical sort of footprint in my mind about the South Korean people. I mean, they're stunningly selfless in these kind of situations, and it might even be to a certain degree a good role model that we in the West might want to consider following. I know one of my partners in crime here locally, Vancouver. He's of Korean descent, and I got to tell you, man, stand-up guy, just solid guy. I really I want to give a special shout out to the Koreans in our community, because historically, ironically enough, they get shit on by whether it's the Chinese or the Japanese, But anyway, I don't know where I'm going with this tangent, but it just struck me as an interesting chord, remembering back to the 1990s and the way the Koreans were running into the streets, just dumping their silverware into the streets to save their currency. I don't know whether we in the West have that kind of self-sacrifice. And they love Bitcoin too. One of the great fun analogies of hey Ralph, 30 years. Your first option trade was in 75. Geez, was that an OTC trade? Was that on? When did the CBOE get going? It's got to be right around that day. Eh? Anyway, just saw Ralph's on YouTube commenting. 30 years. My first options trade was in 1975. Jeez, I was just a young tyke then. Yeah, that's he's got some age. So anyway, where was I going with all this? And this is half the reason why people downvote my videos, because I just blabber on. I don't know, what my role is here. Hopefully my role is part PMA, part this really isn't that different. Part, if you build a plan, half of the reason why they call it, diversification, the efficient frontier, is for environments like this. People complained in the past that they didn't want to invest in bonds and fixed income because the rates that they were paying were so ridiculously low. And look at all the money you could make in the stock market. Well, here's a situation where the bonds have gone up dramatically in price. Stocks have gone down dramatically in price. And ironically enough, if you had a nice diversified portfolio, it's basically a zero-sum game. So this is the unfun part of the capitalist cycle. This is a lot of sort of, and somebody even said it, this might be a lot of conversations about just, hey, cool your jets. Do we really need to push right now? Hopefully also too, and after my wife passed away, I sort of just completely, in a weird sort of way, kind of disconnected with the whole sort of corporate world and debt world and stuff that I used to live in. I've lived this principle, neither a debtor nor a lender be. And so as a result, things like you see a lot of the sort of problems in the economy right now aren't necessarily, I watched a really interesting interview with Fed Governor Bullard today, and actually I posted in the lounge, and I think everybody at TRI should watch that. It was a Face the Nation episode on U.S. I don't know, one of the networks, but the YouTube link I posted in the lounge. Basically this Fed governor said, the irony of it all is that the U.S. economy is actually extremely strong. It's in a good place. So it's just really a question of how much damage does this short-term sort of crisis generate. And, interestingly enough, like in Europe and I think to a certain degree in Canada, what they'd really like to do is say, look, you're not going to lose your job. Your company might have to go on UI for a while, and will sort of subsidize, but at least you're going to keep your jobs. What's dangerous in the United States right now, which could get a little out of control, is just people wholesalely being fired, because then it takes a while for the economic engine to get back up and running. But I guess what I'm sort of getting at here is that they always say technical analysis works best in the absence of fundamental drivers. And of course, this coronal sickness definitely a fundamental driver. So we'll probably start seeing, sort of technical patterns and stuff start to develop. Of course, I think we have some great trade locations now. So we should be building our shopping list. And then once we sort of get on the other side of this, my hunch is we'll probably start seeing some W's develop for the traders. The investors, the irony of all of this is that actually if you can put yourself on a dollar cost averaging plan, if you actually believe in the story, especially something like Bitcoin that has a very finite supply and a fairly entrenched, how do you say it, almost like institutionalized industry. I think there's enough people involved in the Bitcoin industry that the industry itself almost becomes like an organism unto itself. I've suggested to people in the public that if you're actually thinking about what's the sign that Bitcoin price really can't go much lower, I think that actually develops when we start hearing about talks about potential 51% attacks. I don't think we've actually gotten to that point yet. I haven't seen that kind of talk in Bitcoin since back last cycle when we were down around $200, $300, $400 for a very long time. I do remember that there was lots of talk about 51% attack at that point. I started to sort of hear the rumblings of it when we were down around 2,000-3,000, but nothing really definitive. And my hunch is that's sort of the uncle point for Bitcoin. If you start hearing, potential of 51% attack, then everybody within the ecosystem that has any vested interest in keeping the damn thing alive, you'll just see mysteriously they will come in and start supporting price. So I think that's actually a really good sort of benchmark to think about here. Over the past week or so, we've been putting out lots of I have one OG who has gone off and done very, very well for himself, and he's very quiet. He's a very shy gentleman, and I totally respect his privacy. And he sent me this study here by Stephen Livera recently, and I think on balance I really like this kind of thinking. If you really want to try and figure out what value is in this space. I have also recently, and I'm talking specifically about Bitcoin, right? I have recently been promoting, and I'll do it again since he's here. Shane, you got your link to your script. If you could just plunk it in there in the lounge or in the hangout, I'll load it. I think it's also another really good way for, if you really want to take this conversation to the next level and try and really figure out the nuts and bolts of how this cryptocurrency thing works and what is value. I like this sort of thinking juxtaposed with some nice scripts that you can actually plunk in the variables and track those price points as price progresses. Shane, are you there? I always do this. In fact, you know what? I think I even have the link in the library, so I should get off my ass and actually do something here, right? Shane's BTC cost of production script. Yeah, there it is. So I really like these kind of charts and analysis tools. And I think I shared this on the YouTube page publicly last week, but I'll share it again. I think these are the kind of tools that are really going to help you understand the sort of value proposition in Bitcoin. So Shane's script and that gentleman's tweet. Nice job, Stephen Lavera. I really liked that article. That was very well done. So thank you also to Jonathan for sending me that link. He's a very, very nice gentleman. Actually, a big reason why I think I want to keep doing these and the free videos and stuff like that is actually when I was loading up this show today, I put in the title, ask me, you got a question, ask me, right? Or something, boring like that. And I even just sort of asked in the hangout here, are you guys getting any value out of this? Should I keep doing these crazy videos? And they're like, yeah, fuck yeah. But one of our, actually, hopefully she's going to become a veteran, but she's right on the edge right now of preparing for a level 3 exam. But she put it really nicely. She said, this is kind of a nice, safe place to go, where I know I'm not going to get shilled. Brian's relatively well behaved, and on balance, we're all here to just sort of try and help each other out. So and then sort of Josh, my awesome superstar out of the UK, he put we were sort of kicking around little memes and stuff, and he put charts and hearts. That's really sort of what we do here. Maybe I underestimate the value of the PMA, but I tell you, I think it really is making a positive difference. And guys like Sjorder, like you don't understand the value of the community. The community is really, really powerful sort of reinforcer. So we're super pleased with that. So we renamed today's episode Charts and Hearts. Kind of fun chart porn, and I love doing this. This is kind of a fun little toy that I've sort of discovered here recently. I guess just FYI, I did go into the level 1 classroom this morning. I think I saw that Grim was wound up with them around 10 o'clock. I just put a note out. I think they did their prep session, the review session, just to cover everything for them to get ready for the final exam. So if you level 1ers do have any questions, feel free to chime in here. And if not, then maybe what we'll do is we'll just spend the session just reviewing some of the recent tweets and stuff that I've been putting out. But this is a fun little tool. I'm not quite sure what to make of this. We on the site we were sharing lots of really cool videos about chaos theory, and actually there's a gentleman on YouTube. I was chatting about him in recent episodes. Did a very, very good job of explaining chaos theory and why these numbers are significant. And then I sort of applied that kind of thinking, this 4.669, to consolidations in price, thinking that the consolidation is nothing more than built up energy, and when you release out of the range of the consolidation, where does price eventually sort of exhaust itself? I can't, that's basically what 4.669 ratio of this range is. So I paint these crazy numbers up here. And then the other day I was kind of thinking, well, sort of along the lines of WD Gann. Could this relationship of time and consolidation, and then the release on the other side of the consolidation, could that maybe be a helper as to sort of the time expectation for those moves? And that's sort of what this tweet is. It's just a really simple tool. Fib tool, and you just adjust the levels manually to give 4.669 of the range. And then the fib time tool, you just set up the middle of the M or W to the right hand side of the M or W as a consolidation zone, and then do 4.669 of that range. And it seemed to set up some really interesting windows. I mean, I'm a student of the market. I'm not sitting here selling a subscription. Hey, buy my 4.669 newsletter. I'm just curious. I don't know what the hell's going to happen here. But I do notice, and this is the tough thing about trading. It's very difficult. But, as the market's ripping higher, if you start seeing M's, you have to actually start thinking the other direction. And that's very difficult for a lot of people. I'm not going to sugarcoat it. Usually, and this is, everybody who's in Bitcoin 2017 when it was going up, it's never going to end. Then it ends out, Richard Hart starts crying, and the bear market starts. So this is Ethereum, so this isn't a Bitcoin chart, but I'm just sort of doing a funny tongue-in-cheek. Anyway, I have no idea if this recent consolidation is the correct way to use this tool. I don't know. I'm the student of the market with all of you guys. One might argue that actually maybe you can do one off of this range, which might paint a number up top here. Tough to say. But I did find interesting, of course, when you see M's, you actually have to be thinking down. And conversely, when you see W's, you have to be thinking up. Sometimes, you can have situations where you get like W's that come in, but it just kind of exhausts itself and then kaboom on the other side. But on balance, when I see W's, I'm thinking uppy. So I was just curious when I did this W here, down, up, down. I've talked to you guys recently on the free videos, Monday to Friday. I think I've also said something on these Broiler Chicken Show. I was pretty darn impressed with this railroad track slow there. And that really much better looking railroad tracks there. Something is important about this level here. So if this is some sort of fractal floor here, well, that's suggesting a nice move up into 220 area. Also thought it was interesting too. You notice how there's sort of a big node up here on the profile. So that's probably all these trap bulls up in this area here. People saw the pullback and said, okay, that's it. That's the bottom. We go up now. And of course they got caught. And they'd probably love nothing more than to be able to get out. So if these lows can't hold, and I don't know if they're going to hold, it's trader's life, and we do accept higher, I could very easily see a stab up into this 220 area. Interesting thing about M's and W's I've found in my career is that they work a good, somewhere around 60-70% time. And unfortunately, that means that they explicitly don't work about 30 to 40% of the time. That's the really hard part about trading that I don't think a lot of new people to trading really understand. And they don't understand what a professional trader's life is. I don't know whether a lot of people that watch these, or that get in, hey, I want to be a day trader. I don't think they even understand what they're getting involved in. Quite often, the absolute best day trades are actually going in and buying lows and selling highs, which is actually the exact opposite. That's like stepping in here and buying right down in here against these lows. And that's very, very difficult for new people to trading to do. I mean, there was a really good example of that in the S&Ps this past week that I was showing people. Oh, I got too many damn charts on here as always, so I don't know whether I can find it or not. It was right here. This is a classic pit traders trade right down in there. But gee whiz, that's a tough trade to take. I'll tell you that much by crackers. So, I sit here and I go, okay, oh yeah, that's right. We were talking crazy chaos there. So this would imply that the bull has taken root and away we go. I don't know if that's going to happen. I mean, nobody knows for certain. You step up to the plate, you have your reasons to justify taking your trade, you take your trade, you live with the results. Ideally, if you're right, keep in mind, pit traders, and this would be a good feedback for the public audience. All you guys here in the Hangout, you should all know this answer. But just out of curiosity, if I was down there in the pits trading in the CME pits back, say, 10, 20 years ago when they existed, what would be sort of the daily expectation of degree of accuracy in a typical pit trader's life? What kind of accuracy am I looking for? Win versus loss. What would be very typical? Percentage. Do I have to give you the damn number? It's a very low number. Actually, it's lower than that, Andre. You'd be surprised. No, I couldn't pronounce your name. I'm sorry. And actually, this is Ewald? I'm not quite sure if I'm pronouncing your name correctly. No, that's what we shoot for, right? I think that if you find good fundamental reasons, you find 3 unrelated reasons for considering taking a trade, location, indicator confirmation, structure, I think we can get up into that 60-70%. But the irony of it all is that the professional pit traders, they, all right, take it easy, Joshua. They shoot for 55%. That was their edge that they were looking for. Incredibly small. But what happens for that 55% relative to that 45%? That's the key to this. If you can understand that, then you can win at this game. But most people don't get it. If you are in that 55%, what has to happen? Something has to happen. For those 55%ers, something has to happen. Is that my favorite quote? Do I say that a lot? This is a very ironic world, Mr. Team Sam eBay. Right, but Andre, in real terms, I mean, let's quit with the, 2-to-1 risk reward, textbook. I mean, in real terms, what is the term I'm looking for? It's the whole reason why you do this. You got to get what? So what ends up happening, I sure hope not. If that's the case, Rob, you're not going to last very long at this game. Leads. Oh, I like that. It got to get leads. You got to get paid. Right? Haven't you guys, maybe you guys on YouTube have never heard that expression. But the whole point is you can bat like 55%, but if your winners pay you like $2 or $3, but your losers lose $1, that's how professional traders trade. Incredibly difficult for the public to understand that. In fact, there is one gentleman, he's a very popular technician. I actually used to know him years ago. I can't remember where we traded. Peter Brandt. I remember talking to him like, 10, 20 years ago. But anyway, he takes a lot of shit because he will make calls publicly and he'll publicly say, look, I get stopped out a lot. I'm not, and this is the danger, and I've kind of warned you guys in the public about this before. I sure hope all of you guys are getting this. Don't get into the business of predicting markets. That's probably why we don't have that many followers here, and a lot of the people on YouTube and stuff, it's hype. They make a prediction, of course, and then Maybe it works and they become famous. Maybe it doesn't. That's quickly forgotten. On to the next one. I don't think it's in your best interest, especially if you are actually risking your own money in the market. I don't think it's in your best interest to get into the business of predicting where the market's going to go. I haven't seen anybody in all of the time I've been working in the stock market, never seen anybody who is consistently right day in, day out. Always, this guy is a genius. Never seen it. So we want to try and make sure that we're using some sort of analytical approach that can produce results. And ideally, I teach my students, let's see if we can shoot for that sort of 60 to 70% accuracy. Understanding full well you will be wrong 30 to 40% of the time. And the worst part about trading is trading is really, if you do it correctly, it's a business of statistics. You're really just a statistician. You're just a professional bookkeeper. And when your setup comes in, you're expected to act without making mistakes. In essence, you're just basically running a small business of trading. And with very little emotion, right? All that kind of fun talk. And actually, it's really cool. Just the past, every term, what I like to do on the site is I like to pick a new day trading setup and demonstrate it on the site. So this particular quarter, we're demonstrating trading the Dutch stock market. Because everybody wants to trade the Dutch stock market, don't they? But what the hell? We built a setup. We defined exactly what it is we are going to get us to act. And we've just been following the trading setup. And I gotta say, it's been a fantastic exercise. And the results are pretty much exactly as I expected. Ironically enough, this is an incredibly simple setup. So a lot of people are like, oh yeah, buy my complex trading system. It's got 42 different variables and 3 different velocities, and holy Jesus, in the pits. And actually, it's been a lot of fun recently. I have an immense amount of respect for the people at Top Step Trader. Michael Patak is, of course, their founder and director, and I really should give him a shout out for putting the whole thing together. John Hoagland is sort of his right-hand man. He used to also work with a guy named Eddie Van Horn, but I'm not sure if Eddie's there anymore. But much respect for those people. And these are like the serious capitalist people. They're the firm that funded me years ago, prop trading crude. And we have a lot of fun crashing their morning sort of get up and go video for they do on YouTube. John, of course, now he's doing it out of his kitchen. But a lot of fun. So huge respect, huge shout out. I don't even know, I'll even just put if you want to know the firm, it's topsteptrader.com. If you do want to become a proprietary trader, I think they give you at least the avenue without a lot of the bullshit and ego involved in prop trading. So I would, if you are interested, I just typed in there topsteptrader.com. It's pretty straightforward, but, and I don't have any, you see, there's no affiliate links. There's nothing. It's just their damn website. I don't have absolutely no interest in any special relationships or anything along those lines. If anything, the point I'm trying to make is we have a bunch of us TRIers that go and crash their morning show. And it's funny, some mornings I'm kind of like, guys, don't say my name. Let's try and just be subtle and in the background here. But there's so many of us at TRIers on that morning video. It's kind of fun sometimes. So, but anyway, the point of the matter here is that there's a million different ways to skin a cat. There is no one way to be a trader. Ironically enough, oh, I just said it again, Mr. eBay. Every time I say that, we used to have a game on the site during the daily briefs. Anytime Brian said a certain word, the people in the daily brief had to drink. And I remember a couple guys just got totally polluted. The secret word of the day. They'd pass around the secret word of the day. And I remember one time it was the secret word was China. And I just, the whole day daily brief I spent going China, 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 don't get China. That was good times, good times. There's no real sort of one way to trade. The way to trade is the way that works for you. And ultimately, if you do really want to do this, then what that means is you have to put yourself on basically a path, a journey, a learning path. I had 30 years into this, like I just showed you on that tweet. I just learned about chaos theory, and I was taught by a guy on YouTube to actually understand the math behind chaos theory. And this is a new tool that I'm just starting to work with just this year, 30 years into the business. And oh boy, here you go, Brian. Here's a whole new topic for you to learn. And oh, by the way, there are people that have like doctoral, theses based on this math. So if you think that this is going to be easy, good luck. So anyway, the point here is you got to put yourself on a path, a journey, a learning adventure. And you have to understand that really what you're almost doing in a weird sort of way is you have to almost detach yourself from yourself and look down at yourself and make judgments. Am I actually making progress here? Well, we call on the site, looking in the mirror. It's very difficult for a lot of people to look in the mirror. I think, through our education program, we give people the tools. It is a long program. Keep in mind that usually it takes, I would say, a typical person to get from start to finish in our program is easily a good year and a half for all three levels. So, and they always say you don't really know a job until you've actually been on the job for one full calendar year. So, the interesting thing, for somebody who's actually just starting the trading journey, and keep in mind, we work your asses off. The level 3ers right now, we did our program review session yesterday, and just even over the past 12 weeks, summarizing all the information, hell, you could spend at least a few years in university studying each of these concepts. So, it's a crash course, and it's a crash course that lasts a year and a half. Oh, man. Steep learning curve, no doubt about it. But what ends up happening with a lot of students, and this has been my message, since day one, is really what I want to do is I just want to set the table for you and give you sort of a framework with how these tools work. Hopefully through these free videos, you get little snippets. Hey, there's that reload zone thing. Hey, that Beamish guy keeps talking about how important trade location is. Maybe I should consider that. Oh, hey, he's got one of those divergence things going. I notice that when divergences come in, price sometimes doesn't act the same way and often changes. So, W's. I think I'm going to start paying attention to those W's. Interestingly enough, these are just some of the tools that I've picked up on over the years. Student of the market, like I said, maybe now we're all going to be following neighbor of the beast levels. That's the affectionate name that we've given the number on the site. In fact, I think Kavarkinator came up with that term, which I thought was adorable. It's so perfect. Oh, speaking of top step, I should give a special shout out to our level 2 instructor. He actually, Kiran, he actually passed the Top Step testing program and is a full-time funded trader with them. He just that just happened over the past couple of weeks. So congratulations, Kiran. Yeah, we should all give him a shout out. I was so proud of him. I mean, I don't know whether he wanted me to say that or not, but oops, it's out now. So, I mean, the bottom line here is the stuff that we work or that we teach, it works. You have to go through the process of learning. Like I said, Brian's going to set the table. Then you have to go, okay, I kind of like that tool, and I like that tool, and kind of like that tool. And of course, I've got 3 unrelated reasons now. So now I got to get in the pits and I got to start trading. Our level 1 instructor, Graham, I like the fact that he kind of insists that all the students now have to do 100 paper trades before they're really ready to start actually risking hard-earned money in the market. And that includes logging, journaling how you're feeling, fully vetting your setup, doing your mistake finders, demon finders, mistake logs, all that kind of stuff as the trades are progressing. Make no mistake about it. This is not easy. This is a profession that these people are doing here. And I'm very, very proud to say that I think we do a really, really good job of not blowing smoke up your ass, just telling you, hey, these are the straight goods. These are the tools that we think you're going to need to succeed at this. And we sort of put it together in a nice, pretty package for you. Anyway, probably I'll go into the video and I'll just make a time reference. We'll say the first hour of the video today was all fluff, Brian just ranting. Now let's get on to the charts. I don't know. Did anybody get any value out of that? I even asked that earlier. Just sitting there listening to that for the past half hour, 45 minutes. Did anybody get anything that they might go, you know what? That was worth listening to. That's the whole point of why I'm doing this. I sure hope so. Yeah, I mean, you guys know my story. I don't need to go into that. Okay. So, I am watching these fun little chaos levels and doing these time studies. I've got one working on Ethereum right now, and I've got one working on Bitcoin. So I'll report how this goes. I have no idea. This is kind of just a fun experiment, watching how this plays out. I do talk to you guys. Where's the best place to show this? I think I ran into this on Friday. I think I did it over here. Yes. Okay, good. Phew. So, over this short term, I mean, actually, you know what? Probably better. Let's back up a moment. All right, back up. I was actually really pleased with Monday to Friday. We do a hour and a half long show on the site, and I try to include as many different voices and perspectives on the market as possible. If you are a veteran on the site, you have an open invitation to come on and chat and tell the community what's on your mind. And if you found any new tools, we discovered Bobo and Raf's 877 level through this kind of exchange, having them come on and show the site. I guess right now we only have 2 days of the week where it's just Brian. I know it's painful, but we're trying to fill up all of the days with different content. Lately, and it's actually in a weird sort of way, we're kind of benefiting because of coronavirus, because more people are in front of their computers and participating on the site. So I don't know whether it's a good thing or bad thing karmically, but we do see a lot more sort of participation because of the sickness. But recently we've had one very crypto enthusiast, very crypto focused gentleman who I think is an absolute stand-up individual, come on the call on Fridays, Colin. And again, just sort of, what's the overview? And I thought he did a really good piece on Friday where he just simply said, sometimes you can actually try and over-generate information from the market just out of sort of a need, a want to be trading, when if you just sort of step back and look at the big picture, it'll sort of just help you put things into context. I think all of you, hopefully, you've gotten the message about how important W's are for somebody who's thinking bullishly in the market. And really what we're saying there is higher highs and higher lows, and how we can use those W-type patterns to help frame risk if you're considering buying, and M's, same thing on the other side for selling. So often it helps, just to... especially in this kind of market state, you can see what prices all over the place here, jumping up and down. Just to sort of, just zoom out. Just take a moment and just zoom out and look at the big picture. Let's call a spade a spade. There's no point in bullshitting you people. If we just change this monthly chart to a line chart, we see a very noticeable letter of the alphabet here. There's no sense in, BSing about it. I was a little surprised, actually, on this recent monthly candle, of course, and that's sort of the sky is falling candle there, March, with COVID and all that. But I was pretty surprised to actually see a ramping up of the down volume. And you notice that the up volume on a monthly basis is kind of trailing off here, right? The green bars are getting a little bit less, a little bit less, a little bit less. So on a monthly basis, is there like oh my God, this thing's Wing, it's getting ready to moon tomorrow? And you tell me. And the great part about what I do is I want to empower you, and then I want you to actually tell me. So YouTube audience, you tell me, is this look like a W right now on a monthly basis, or does that look like an M? Let's call a spade, people. And all of a sudden, big downvotes. Boom, 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 boom. It is what it is, right? I suppose one could argue we could do A, B, C, D's, try and give us some sort of target down into here. That's very doable. It is capitalism. If we think na levels off the monthly basis, well, clearly we've got something going on down here. So we got one na, right? And then another na. So my hunch is there is some half-decent buying support down in here. As I sort of pointed out, and I had said recently, public, I really would like people to take the time. This is a really good time. Why not take the time? Hey, there you go. Got a downvote. Way to go, guys. Take the time now and try and understand the whole process of mining and why miners' cost of production is so important to Bitcoin. I think that's a good exercise to go through. What is, the current S20s? Actually, current, I suppose the most current is S17. What's its sort of uncle point? And then also, too, I thought what was great about this article, S19 in May, I thought I heard Samsung had like an S20. Does that sound familiar? S20 is a phone. Okay. A good thing, again, 1 + 1 = 3. I got Shane here keeping me honest, right? I would rather he tell you these kind of things than Brian just, again, blows smoke up your ass. I'm not the crypto expert, and I never will be. If anything, I love to lean on the community for this guy. And that's, getting back to Shane's script. Everybody just go grab Shane's script. So actually, we're going to have to add an S19 to this soon. Is that what you're saying? So really, what I think's going on here through this process right now is how do I say this? The good part about a lot of people that watch this broadcast is, in a weird sort of way, you might actually be insulated to a certain degree of the broader market sort of malaise. Main Street is going to absolutely have their asses kicked here. I believe that it is now where understanding the use case for Bitcoin, and especially things like Ethereum, where it's getting so embedded across so many different infrastructure platforms. I believe that, and this is just, obviously don't take too big of a risk on your overall portfolio if you're dealing in serious sizes. But I do believe that, things like Ethereum and Bitcoin, and to a certain degree Litecoin, I still think Charlie Lee's Satoshi, but that's just me. I think that they are here to stay. I don't think they're going anywhere. So really, it's just to me, it's just a question of what is going on here underneath the surface now that the public has absolutely no interest whatsoever. I think that this is a question now of the institutional players, the bigger players, the smart money, all that kind of talk, sort of positioning themselves for the next bull, which will probably happen in the next few years. There's one gentleman that we make reference to a lot, Benjamin Cohen, I think his name is, and he's sort of publicly, as a blockchain sort of expert, saying, think 2021, 2022. I love that thinking. It makes sense. And also to remember that Bitcoin sort of got its sort of start through last financial asset crisis. And, keep in mind, I was trading crude oil through like 2011, 2012, 2013 kind of idea. And capitalism, every single day, Eddie's like, oh yeah, bad econs, blah, 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 prices heading down, blah, blah, blah. Crypto was a bright spot. And that rally in Bitcoin 2012, 2013 after the Silk Road reversal, that was like one of the only little bright spots in the economy. And I got a funny feeling that that's sort of what's going to happen here too. Is that there is value here. The marginal players are being basically liquidated. Interestingly enough, the ecosystem of crypto is basically making a lot of people that have sort of been chasing low electricity costs, starting to make the use of old obsolescent equipment undoable. And the great part about Satoshi's vision, maybe we shouldn't say that. Satoshi's concept, Charlie D's concept. I'm just kidding. I don't know if he is or not, but anyway. Triggered. Yeah. We don't want to say, and that, what a shame, eh? Now we can never say, what was Satoshi's vision? Some assholes actually corrupted that term. Oh, goodness. Kevin, what are you going on about? Are you in the call here? What are you getting us all excited about here? I know you're lurking in the call. Yeah, didn't you just post that? Why coronavirus should be the least of your worries. Oh, goodness. Okay, so back to our story here. Bitcoin, I believe that it has an institutional presence. I think there's enough money in the ecosystem to keep the thing going. We are going through the process of course, the broader economy going through its very natural unwinding after a super extended long bull market. Have been using for those people that are kind of like, okay, so when you kind of thinking stock market can turn back up, been using this study that one of our current level 3 students put together when we were doing our intermarket analysis relationships module. And if anything, this is exactly what I mean by 1 + 1 = 3 at TRI. This was, I think Joe could actually do a doctoral thesis at any sort of economics university program. Well, maybe master's. I don't know about doctorate. You have to sort of come up with a new thinking for doctorates. But nonetheless, what is the relationship between consumer products that are discretionary, things like big screen TVs and fancy purses and stuff like that, versus toilet paper, bleach, and sort of staples that you absolutely have to have, Campbell's soup, that kind of stuff. That's this XLY versus XLP relationship. And quite often what ends up happening here is this is sort of the demand for frivolous stuff versus the demand for stuff that you absolutely have to have. When the demand for frivolous, that's XLP, I think. Maybe that's XLY, I don't know, whichever one. Whenever frivolous starts to erode, interestingly enough, you see it in the company's numbers. You see it in their balance sheets, in their earnings statements. Their stock prices start to erode relative to consumer staples. And so that's sort of what creates this downtrend. The interesting thing about this is that quite often it's a really, really good leading indicator, in that if it goes into divergence with the broader index, in this case measuring the S&P 500, that's a major warning sign. So what a surprise. Well, this was the last cycle. But you can see 2007 into 2008, it was starting to flash major warning signs here right around September 2007. And then the stock market has to roll over. But the important thing here is that what does the market bottom look like? And if you think about it in just real terms, what does a happy consumer look like, right? Because we are a consumer-based economy. So what does a happy consumer look like? Well, they're out buying big screen TVs. They're out buying Gucci bags. They're out, doing that. They're out buying their Lambos. Versus buying Campbell's soup and Tide laundry detergent and that kind of stuff that I absolutely have to have or I'm going to die. So often at market bottoms, you actually see the stock market itself, and ramen for the win, eh? Is ramen, is that a discretionary or non-discretionary, though? Anyway, you often, as a sign that, hey, the economy's doing much better, it's not nearly as dire as you think, you actually see the major stock indexes that have things like industrial companies and banks and stuff in them, they actually keep moving to new lows. But the relationship between the fluffies, consumer discretionary, versus staples, that actually starts to turn up. So this is a really cool little study that you can build on your own. As I had said, this is a topic in one of our level 3 program, or a little bit more advanced program, our God mode program. But hopefully you can understand just having this kind of tool in your back pocket and understanding the information that you're seeing gives you a wicked edge over the public. Just understand where we are in sort of economic cycles. So, current situation, and really for us to be bullish of the economy and bullish of the stock market, we want to see this bullish divergence. Do we have that right now? And what's worse is that even just on Friday, this son of a gun here just went and printed a new low, and you see the S&P 500 did not. So that's more of this bearish divergence scenario. This is the beginning of the bear, not the end of the bear. Understanding that, and also too understanding markets never move in a straight line forever. I mean, you can see how big the drop is in the S&Ps. Could we go through maybe 3 or 4 months here of the market rallying back, and all the politicians and Donald, we have one up day that brings the market back here, and Donald Trump comes out and goes, biggest stock market in US history, and I'm the best president ever, right? It's coming. So, but the point here is, I would probably say that if you're thinking about sort of a resistance point on the S&Ps, my hunch is probably that high, that high. You see this huge battle area, that interesting little pivot there. So, into like June, I could easily see this stock market dead cat bounce work its way back up into this sort of 290 area. But more importantly, this study is all about what's the sort of general overall message of the economy. It's a great piece. Absolutely fabulous piece. So congratulations, Joe. I think you definitely got your money's worth. And now I don't have a worry about a guy like Joe, because he sees the sort of forest through the trees. So proud of him. Great job, Joe. Hey, Joe, what do you know? All right, back to crypto and Bitcoin. Sorry, guys. Didn't mean to get off topic there. Interesting how I had this little date right on Bitcoin here, right? Turns out that actually today has been a day I've been waiting for quite a while. It'd drive you crazy, but I had been watching and sort of talking about this celestial event window. Unfortunately, there's actually like 3 dates that we have to worry about here. This image doesn't really do this that much of a justice, but you can see this was April 4th, so this is yesterday's image. If you can somehow put yourself like your eyesight is here, you can see we got Earth, Mars, Jupiter, Saturn, Pluto all sort of lining up in a line here. This was a nasty, nasty day. I've been worried about this day for quite some time. I've been talking at length about worried about this weekend, and I got a funny feeling we just went through the pivot. The tone I'm hearing right now, of course, if you are in the United States of America, you know exactly what the tone is. I'm seeing a little bit of sort of light at the end of the tunnel for Europe right now, in that they're just sort of, especially hard-hit countries like Spain and Italy are sort of seeing anecdotally a little bit of the talk about the peak in new cases, but understand that you might have a peak in new cases, but that means of those new cases, there's still going to be a surge in ICU or hospitalizations, because that's a bit of a lag. And then obviously mortality for those people that didn't make it through ICU, that's going to be a bit of a lag. So in a weird sort of way, we're at the I don't know, man. I do like the idea that this is the catalyst event window. It's here right now. The interesting thing, though, which is, fascinating for a student of the market like myself, is I wonder whether, like this could be like, for Bitcoin and the stock market and all that. I've been talking to you guys repeatedly about how I really can't be a buyer of these big jump ups like this unless maybe I'm zooming into lower time frames and hunting like bots and stuff like that and living a trader's life. But like, Joe's Six Pack, mom and pop, this is pretty actually dangerous right here. I think I had shown you just there briefly this chart. I could very easily see Bitcoin actually pop up here just a bit higher. I think there's like a 3 drives pattern working here. And that 3 drives pattern would take us up into Mountain Man levels, 61.8 fibs. And that's about, could we see 8,000? Nice big fat round number on the corn. It wouldn't be shocking, let's put it that way. But at the same time, too, what I'm worried about, of course, is this is basically straight line up. And actually, even earlier today, people were mentioning in the lounge that we were coming up against a pretty important trend line there off the lower time frames. Yeah, there we are. So this is a 4-hour chart on MEX. We had this channel working here. So we were dumping here this morning, but it looks to me like we're just sort of bumping along the top end of the range here. It was encouraging. I did have a time window that I was expecting on the second or third. I was kind of thinking we would dump into that, but you can see they were sort of going through the process of working through these channels. The channels were rejected, and interestingly enough, on that time window, basically they finished price almost exactly where they started that time window. My next time window is coming up here on the 6th, which is basically tomorrow. This is again, remember we were in this kind of environment. We're kind of like, well, did we pop out through the top and continue our way higher, or did we roll over and M out? In this case, we M'd out. Here we are again. You can see they keep running the price up, but somebody keeps stepping up and slamming it back down. It also, too, I noticed, and I heard sort of people talking in the lounge about the DOM. It's almost like we're waiting for actual serious buy volume to come in. What I did notice when I was looking at the indicators, I don't know whether you saw that earlier, but you can see OBV is trying to turn back up here, so that's good. Everybody has just quieted down. Interesting how we made that reference off that shooting star peak of that big down red bar print. But following that, no real new selling. The bears just quietly went to sleep. At the same time, too, we can see the bulls were basically pretty sleepy. They kind of woke up a little bit here. You can see they're trying to perk up here. To make this really easy on a 4-hour basis, if you see the volume bar and as this, nice friendly 477 million contracts on BitMax, whatever that means. If we see a green bar above this number here, I think the bulls have woken up and taken over. Still a little bit early to declare that just yet. Did find it fascinating. We've been talking about this recently. Again, these are lower time frame traders got to trade kind of setups. I don't think it's a good idea for mom and pop to get too wrapped up in this. Dollar cost averaging, and of course cheap ass Brian, if I can buy at or below reload zones, below value, you can see the profile. We've talked about this recently. It is a bit empty. I don't mind the idea of a nice pop-up up top here. You can see the bot is just working away. We've come right into an apex event here on some trend lines. And I could completely understand if a trader's like, well, I'm long off this level and I'm shooting for 92.35. I mean, it's there. I'm not going to fight it. I don't know whether it's a trade I'd be too comfortable with. I had sort of talked about how I really wanted to see a nice test of these lows. That's really what I'd like to see here. But the internals, you can see RSI is trying to bottom out desperately here. MACD is trying to W out here. And really the biggest driver here, if the buyers step up and buy, and you see that in the volume bars, well, we'll know the bull is back in earnest. I do find it fascinating. This is what I like to call a bow tie setup. I don't know whether you can see the bow tie. Sort of looks like... It's a pretty little bow tie. I used to have to wear ties to class when I was in boarding school. So it was all the rage to be able to tie your own bow tie. Imagine that, eh? So there's the bow tie. I don't know whether you can see that or not. It's too busy. But I wouldn't be surprised if once on the other side of this trendline apex, we actually go and do this kind of action. Hello.
Oh, not much. I was actually just about to make myself some lunch. I'm watching the rest of my daily brief. I'll be back in like 20 minutes.
I wonder if Craig knows that the whole world is listening. The whole world is listening. The whole world is listening. Well, all three of us. Sorry. Anyway, where was I? So, coming up to this apex, awfully tough for me to say, all right, you buy here, you sell here. I mean, hopefully you can see the nice triangle. My hunch is, if I was a betting man, we're probably going to do a similar triangle. Think bow tie on the other side of these lines here. What we'd really like to see, and this is kind of interesting, right, is you can see that the bot level is now the POC. So if you are taking this long and you're shooting for up top, then basically what you're saying is, you know what, I think they're going to defend this level. As I'd said just a moment ago, if I wanted to sneak in here, what I'd love to see is something like that, right? That's good old Brian. Actually, I like the right-hand side of the W higher than the left, so why don't we do something like that? So I'm kind of just frozen here right at the moment. You could probably drill down to like maybe even a 15 or 30 minute chart, and I bet there's a little bullish bot set up inside there. But I don't know whether I really want to go down that road with you guys here on the YouTube video. Let's just sort of keep this higher time frame. So as it stands, if somebody said, hey, I bought 66.93 and I'm going to risk against 58, looking for a pop up to 9Gs, I wouldn't have a problem with that. I don't think it's unrealistic. I do like the idea of 50% rules. Don't let a winning trade turn into a losing trade. So if this idea of taking this W actually starts working, then you can move your stops up. At 8,000, and remember that reference to Mountain Man and the 3 drives pattern, I think this is where you're going to start seeing some serious resistance on the corn if we do rally. So that corresponds on this chart to this sort of move stop to trailing. So don't be surprised if there's some sort of pop and then it quickly sort of flutter, and then maybe even craps out at that level, because there is Mountain Man staring us in the face, right? Remember, he's sitting there. And of course, great idea to have AOCO orders working. You can see we got a bunch of trendline resistance up in this area here. I could see a big old fat pop up into 9,000 and change on some sort of crazy FOMO event. And that's probably the last thing in the world anybody is actually thinking now, right? And ironically enough, whoop, there's another one, Mr. eBay. Time to take a drink. Often the market will actually do the exact opposite of what everybody's expecting. So, I don't think anybody's expecting a big face rip rally up here out of stocks and out of things like Bitcoin right now. So, go figure, eh? I definitely think this bow tie event here, if we lose this level and then start to actually M out on the other side of this level, then I think we got trouble. But for the time being, I'm just sort of like, man, we're consolidating right off the bot level, and it's just a big hurry up and do wait. I do understand some people are getting antsy and thinking that they want to strap on hedges and just lock in prices here. I don't really have a problem with that, but at the same time too, I don't really necessarily have any sort of outright sell signals. So that's sort of what I'm seeing right now. If we do lose this trend line, then I'm out on the other side of it, then yep, we could take a serious dip against these lows. So if you do follow lower time frames, that's what I'd be watching. Interestingly enough, from this perspective, we could easily pull right back down against these railroad track lows here on Bitcoin, and still nothing would change here. Be aware of that. And also Ethereum, we could pull back down here. Market could lose a good $20 here, no problem. And nothing would change on this. Is that going to happen? I don't know what's going to happen. Don't get into the business of predicting the future. Just trade setups and live with the results. All right. Is there anything else I can talk to you guys about here today? One thing I did notice that kind of perked my interest was Bitcoin versus Ethereum. Again, here's our crazy little sort of time window analysis. No idea, but that was an interesting chaos level and then back down. Did we actually complete this move down here? I don't know. I don't think we have. So just be cognizant. This could be a bit of a trap, kind of a crappy trade location. Hogue, of course, wants to be buying down at the bottom of value. I suppose if this W does come in, it hasn't come in yet, but if it does come in, then we can start thinking uppy, and it's just basically a trade off of the POC. If we lose the POC and we lose value low, then you probably better be careful. I did see a lot of people on the site talking about this recently. I don't know whether this has actually turned yet or not, but I'm a little worried that there's a bit of a trap being laid here. Looks a little dangerous. If I go boobity boo and then boobity boo. Yeah. I don't like it. Is that a gap? No, no gap. But I don't like how close 78.6 is to this. 78.6 has not been traded to either. So, if you are going to take this W, I know a lot of people have been like, rah, rah, rah. Okay, here we go. But I think you got to get this to actually confirm. If you just want to wait for a clothesline confirmation, Colin, you're really good at this. If we change this to a line chart, maybe just let that actually break out, close there, and then work your bid on the Wyckoff check. There's nothing wrong with that. I just, I actually did this recently where I bought this little SI bank stock on a railroad track breakout, and then it didn't have the gumption to get up through the double bottom. It was just 2-bar railroad track, and the thing just crapped out. It couldn't break back up through the middle of the W. So be careful if you're going to try and sort of front run this. I don't know whether this thing is actually turned yet or not. But should be interesting if this thing does turn. All right. This thing does turn. Actually, that's pretty. Is that it? Oh yeah, I guess so. That's suggesting 17th of April. Nice rally up into 0.024, which really reload zone. You could probably see that. You can see it on the profile. I kind of like that thinking down there because I think what has to end up happening is there was a gentleman on it was out of India, I think. It was sort of saying that the eye of the storm was this 31st first. I think that this Jupiter, Saturn, Pluto, and actually I didn't realize Mars was also in that. I think we said Mars, right? Sort of now we're on the coming out the other side. I think that the headline news is going to be absolutely horrible. But the irony of it all is that people will look back and they'll say, well, yeah, the news was really bad, but keep in mind, price had already come down. So, if you look at Ethereum or Bitcoin or any kind of risk asset, that was, all of this is them discounting price. Brian, he doesn't like really these V bottoms anyway. So this all looks very suspicious anyway. And then, ultimately, actually it's interesting because we also pulled up the options on the volatility index. And the options that expired on Friday, the option boys made out like absolute bandits. Just absolute home run, huge wins. But interesting when you get into here, there's a ton of puts that were bought all the way right down to the bottom. which tells me that I could actually see a stock market rally into this April options expiry, which would sort of be along the same lines as Bitcoin's counter trend rally. Keep in mind, I think the halving event is coming up in early May. So usually I've found that the halving event rally happens about a month ahead of the actual halving. So, do we just continue to grind our way higher here into that sort of pre-halving rally? That could very easily be the case. And I think I showed you guys recently, I was talking with one TRIOGer, and we kind of were thinking something along the lines of, there's the top end of your trading range, just an absolute mess. And it's tough to use this China pump, but interesting if you go off the clothesline that high. So if we use something along those lines, make that nation big. And then we do another one off of these lows, something along these lines. I'm not going to say this is perfect. I don't know, something along those lines. It almost feels like this is our trading range. So, you see how the market just chung. Could we do that chung? Yeah, it's totally realistic. You want to see something that really fry your brain. And I love this. And some guy's like, oh, that guy's calling 11,000 on Bitcoin. I'm not calling anything. Remember, student of the market. I just love to play with these tools and just sort of see what they tell me. And I thought this was so cool. We did this spiral study on Bitcoin, and just to try and understand the consolidation in price and try to put a context. Like level 1, we teach a lot of level 1ers that, am I still recording or did something crash? I guess somebody's PMing me. That quite often consolidations look like triangles. And then how do you sort of wrap your head around the math of the triangle? Turns out we can actually break this triangle into exactly that same image, right? And I'm just eyeballing this, but hopefully you can see that same triangle. That's the same triangle there, which creates two triangles, right? Because now we have this image, and then you have this image, right? Which is sort of like a right angle. I don't know the names of triangles. I'm terrible at that shit. And then, again, so now we have this image now, which was originally this image. So then we can do the same thing. And you can create another triangle going this way. So now this triangle here looks like this triangle here. This triangle here looks like this whole triangle and this triangle. And you can just keep doing this over and over and over and over. And keep just breaking this down. This is how, and frankly speaking, I think this is how actually the universe is built. It's actually built on triangles. But you can sort of see the logic that I'm going on here. Hopefully you can see that same pattern. It just keeps going over and over and over, all the way to infinity. Like I said, it's kind of like, trying to learn the matrix. Anyway, so the point of the matter here is if we do sort of think along those sort of triangle thinking, I think that the Nautilus shell actually is sort of nature's way of building that triangle. And so we often see that the triangle resolves with the Nautilus shell. And what should happen on a triangle is the rule that I learned years and years and years ago is the triangle should resolve about 2/3 the apex. So if I've done all my triangle math correctly, blah, blah, blah. And of course you can go through all that on your own. What do I want to hear? I guess price? No, I guess date. So if this is right, and I don't know if it's right or not, but again, this is free content, right? What are we supposed to call this? Let's see if anybody's even listening on YouTube anymore. What are we supposed to call this content that we're watching on YouTube? Interesting how that's almost exactly 90, eh? Oh, that's fascinating. Because we were having a good conversation in the lounge today about the significance about the number 9. Market prediction hour, yeah, right. That's good. Edgy. Oh, geez, nobody's commenting on YouTube. Is it YouTube? Maybe the YouTube page crashed. Wonder if it's still working. It looks like it's still working. Anyway, Edutainment. Very good, Peter. All right. Anyway, Peter, I think's in the lounge here. Anyway, so I threw on this triangle after this rally off of the lows, tried to sort of think about what would a consolidation look like. As I said, usually these triangles resolve about 2/3 the apex. That's supposed to be the rule. And lo and behold, look at that, eh? Almost exactly right on the nose. Tell you, man, that's take a screenshot of this. This is the kind of shit where, it's just not talked about in the market. People just don't talk about this stuff. It's so weird. I mean, I don't know if I've done these numbers correctly, but anyway, as I had said there just a second ago, usually the rule of thumb is 2/3 the apex. So I found it fascinating that we actually did this Nautilus shell. And what usually happens with the Nautilus shell is it loses the triangle. And the key here is if it can recapture it. And if it can recapture it, was the indicators in divergence? If they were, then technically you take the first market structure signal on the other side of the break. So we look at the indicators, and lo and behold, there was a divergence. Kind of a fun little tool. I mean, I'm not telling you here that this is the way to trade, the only way. I just, student of the market, trying to understand what's going on here. So, been watching this study play out. Doesn't look like these numbers are exactly lined up, but nonetheless, kind of as I said, a fun little experiment. There we go, something like that. So I was really interested to watch this counter trend rally because, in essence, if this was a bear, the bears had permission. The gates were wide open. If this thing was going to dump, it was going to dump. They didn't. Turned it right back up and then consolidated, and now we're starting to paint higher highs and higher lows. Go figure. Interesting conversation about 200 period moving averages. Really good analogy that, taking a trade into a 200-day moving average, and this is a 4 hour, so 200 4-hour bars. Same logic. In essence, acting as resistance here. This is going to be a pretty big battle. Can the slower moving averages now start accepting above, the faster moving averages start accepting above the slower moving average? And that's all about sort of trend and stuff. So where was I going with all this? It's kind of funny. When I did the Nautilus shell and I set the scale to pi, 31.4. I don't know whether it's right or not. Again, just our student of the market. And I zoomed out. I thought this was really funny. Lo and behold, the Nautilus shell's top is that upward trend line that we were talking about there a minute ago. You can't see it. Off of that low and that high. And that low, and that high. All right, that megaphone that I showed you there just a moment ago, this right here. I thought it was fascinating that Nautilus shell just bangs right into that 4.669 level right against that trend line. That's, talk about 3 unrelated reasons for a trade. Trendline resistance, chaos, and Nautilus shells. Hey, there you go. Isn't that impressive? I mean, and the weird thing is, does I don't mind this thinking. Keep in mind, the market's going to do any old damn thing it wants, right? Just understand that. That's just the way the market works. So I just find it fascinating that we just keep seeing these levels jumping out at us when we do all these fun studies. There's no guarantees. As we said, over the short term, there's Mountain Man and all those previous highs. Think no. Think all the trap bulls in here that would just love nothing more than to get released. Think AB equals CD. So does it, and trend line resistance, does it make sense that we could see a push into here, but we could also see a nasty rejection? Sure. But, you know, if we are working our way higher and we just keep surging, just keep this number out of the back of your mind and that trend line and the idea of the market likes to rally a little bit ahead of the actual halving, usually about a month or so. Don't be shocked if you see the market working its way up here. Is it a buy signal based off of that? No. It's just sort of, you know, chart porn, as we do. Can you incorporate this kind of thinking into a trading plan? And these are my reasons. And, you know, I had even posted, I guess suggested to my local trading buddies, my awesome Korean role model, and my what is it? Kitty Kitty Bang Bang? Kitty Kitty Bang Bang chauffeur. I like the idea of us building a trading plan and just saying, look, if this thing's Wing and we have a sort of time window when we expect these, let's go and just see if we can buy like really, really short-term options, maybe like, you know, just a week or two dated, and maybe buy like a 210 call option that expires, you know, just on the other side of this event window. And just see. I mean, we might be on to a killer trading idea here. And, you know, the proof of the pudding's in the eating. I mean, if we had bought a short-term call with an expiry just right around that, would that have been a half-decent trade? You tell me. When this happened, buying a short-term expiry call right up in this area on the other side of this window, you tell me. I mean, this is how these crazy options, CBOE option guys get stinking rich from this stuff. So, I'm not, you know, and especially on the YouTube page, I'm not here to teach you how to trade. It's just way too complicated. There's too much stuff. I'll use these free YouTube shows to try and sort of tell you what's on my mind, give you the opportunity to ask questions, and hopefully interact with you and, you know, drop tidbits of free information. I can't sit here and go, okay, well, you know, here's how you're going to build your trading plan. Here is your strategic vision. Here is the market that you're going to be trading. Here is your capital that you're going to be working with. Here is the setups that you're going to be working with. I mean, it's very, very individualized. I can tell you what I'm doing. And if you like what I'm doing, you're more than happy, or you're more than welcome to follow along with me. But please understand, I fully expect to be wrong a good 30-40% of the time. And I was saying this earlier. Trading's about statistics. And anybody who studies statistics knows that you can go through a period in a massive statistical model where you have maybe like 3 or 4 or 5 same statistical input repeated in succession, and if you just get mired in that very short-term data set, you can completely misinterpret the overall statistical model. They always say worst thing possible for a new person to trading is to have a whole bunch of success right away. Absolute worst thing possible. Because then you just get into the habit, oh, this is easy, man. It's always like this, right? And then, of course, market state changes, and you have to go through some losing period. Anyway. Okay, so actually we got a couple questions here. Why don't we answer questions? So, Constantine asks, can you please explain what the chaos theory you've been referencing is? Yeah, that's all this kind of stuff, eh? Probably best, Constantine. I think in recent videos, these broiler chickens, go back and watch like the last month or two. I think about 2 episodes ago, I actually posted the YouTube video. Or you can just... Shane, do you think you could just... Well, okay. Shane just shared it with me, but I'll post it in the YouTube page there for you. Boom. So I have no idea what that link was, Shane. Yeah, maybe Shane, can you post that? Because when I copy your link, it has a meet.google.com redirect. So I'm not quite sure what the hell that is. Yeah, also too, but did we do that publicly? I don't think we did that publicly. That was within the site, wasn't it? So, as a sales pitch, Constantine, to join the site, and keep in mind the site subscription, it's comical how cheap this place is. Raf and Bobo spent about 45 minutes, half hour going through all the very specifics of the math behind all of this. So, I can't post a link. I'm not a presenter. Okay, well, it's all good, dude. Thank you so much for your help. I hope that worked, everybody. If it didn't, somebody says it is okay. We can get to the video. Okay, awesome, cool. So all I will say is that in mathematics, if I understand it correctly, and this is going to be a really cool demonstration of how poor a teacher Brian is. But all I'll say here is it turns out that there's almost like a normal distribution curve in statistics, and I'm not quite sure if I'm even doing this right. But what ends up happening is it ends up sort of going like this. And then like this. And then you get to a point in the statistical inputs where there's just so many different variables that like sort of creating a very accurate prediction of what's going to happen becomes very difficult. And it doesn't actually, what's really interesting about this is it doesn't, like the way that I've drawn this here is this would imply a very uniform nature to this. So think of this as sort of like, relatively predictable. Okay, we're getting a little bit more unpredictable. Oh, Jesus, now we're getting really... And then by the time you get to sort of like this point, it's almost impossible to predict what's going to happen. And in the weird sort of way, I like to think that, in assets, we go from sort of like a bear market, then the sort of conversation changes and something transitions from, I'm heading down and the sentiment, everything is directionally down, but then something happens through here that changes the dynamic of the market and supply and demand. And in essence, you could argue that this is a war that's going on here because the prevailing trend and this sort of directional bias is down. Something has changed. There's been a power shift. And I might argue that this shift where you actually make the low to the point where we go through this battle where the bulls start saying, fuck you, right? Na levels and all that kind of talk. Then the bears ultimately acquiesce. This is an incredibly powerful fight that goes on here. And in our module on point and figure charting, people back in the day before computers, they would use point and figure charts. This is what's called the horizontal count method. And literally count up the fight. And the bigger the fight, the more the boxes in a specific range, the bigger the expression on the other side of the consolidation breakout. So how do you quantify the release of this energy? And clearly, right at sort of this point right here, there is a lot of energy. This is a very, very strong. I'm strong like bull. Don't get in my way. And then as the bull sort of progresses, and interestingly enough, we teach on the course, you can actually, you have to at some point get to the point where you can intuitively start to see data. So, we like to use something like a MACD histogram to measure raw momentum. And if we start to see raw momentum expressed in the MACD histogram actually trending down, but price is trending up, then that's a warning sign that, hey, you know what? This is not nearly as strong as you think it is. And sure enough, usually we am out and back down we go, right? So you can actually intuitively see this in price if we start, you see how big this move is, then this moves a little bit smaller, and then this moves a little bit smaller, and a little bit smaller. So you can actually see, again, you're good. And keep in mind, this it takes years and years and years and years to get to the point to intuitively be able to see this. We try to teach this in our introduction to understanding momentum indicators in our level 1 program. But the point is that this is sort of the intuitive way to see that momentum failing. We use indicators, and we have a bunch of different sort of momentum oscillators and raw momentum guides to sort of visually show us that momentum failing. So, strong momentum here, lots of energy, very bullish, and what we usually say is don't get in the way of a bull like this. You're going to get run over. Then the market starts moving up, and maybe there's fibs and stuff. This was an old high, and this is a low, and so as a result, 78.6 is up here. 61.8 is down here, so this is good old Brian's reload zone right up in this area. So Brian's thinking, of course, I'm looking for top, right? Location, location, location. I look down at where the market bottomed. I see that momentum is waning, divergence in indicators. And here's the cool part, is turns out that quite often this energy here is actually sort of pre-predictable, where we're going to take that range and apply that chaos thinking, and in this particular case, I'm just eyeballing this, right? But in this particular thinking, if I start to see things like chaos levels lining up with previous reload zones, what this is really telling me is that the move up into this level here was actually predetermined. It was, totally, Daniel. And of course, remember, guys, right? We never want to take a trade off of just one reason. Ideally, what we want to see is we want to see confluence of reasons. So Daniel just said, coupled with that, with a nice volume impetus signal. And of course, that's a concept that we teach in our level 1 program on how you can actually interpret volume and money flow based on the volume bars. And, we're actually talking about some seriously powerful tools. Yeah, you're telling me, Bob, these people don't realize people would pay like tens of thousands of dollars on Wall Street to go to a conference and me explain all this shit out. And I just totally give it away for free. I'm such an idiot. But I don't know. Is anybody getting any value out of this? I sure fucking hope so. Joby, you guys happy up there? So, anyway, what do you think? Does that sort of help explain chaos? Does it make sense that by the time we get to this point in the statistical model of sort of random distribution, that in essence that's sort of the same thing as thinking about the exhaustion move, and how we can often see this express this sort of exhaustion in the market based on this kind of chaos thinking? This is a very powerful, but once we get, and I don't know if I've done this justice, right? I might have totally fucked this up. But the point here is you get to a point on this distribution where it just gets absolutely chaotic. There's just too many inputs. And actually, does somebody have the picture of it? It doesn't look like this. It actually looks almost like a pitchfork. Bob says, thanks, Jojo. Did you hear that? Bob, where's your picture? There you are. Did you hear that? Did you? I'm looking at my wife right now. Everybody's like, okay, this guy's crazy. And I just got a bling out of nowhere, so that's good. That obviously came from her. Okay. All right, so we answered one question. What do you think, guys? Was that worth your time? Did anybody get any value out of that? Sure hope so. What do you say there? Looney is the best possible way. Well, I sure hope so. You want to... yeah, well, I will leave that story for another day. Can you please explain? Okay, so Constantine, I sure hope you got a pretty good talking to about that. Zonk XX says, what about log growth curve chart? On what asset? Zonks, we could look at a log chart. Where is there is Zoc Nick? I'm not quite sure how to pronounce that. All right. Well, I'm not. Was I using this chart for anything? I don't think so. No. All right. Yeah, I'll just erase all that. Remove drawings. Poof, gone. All right, so, just sort of finish off. We could look at a log chart. Why don't we look at a log chart? So let's see what it looks like. Log chart. All right, so what do we see here? It's actually interesting. There was a gentleman, remember Philby? Philby was doing his logarithmic charts and whether those curves would hold and stuff. It looks to me like they're a little bit... hey, awesome. Colin, did you... Colin, let's see, that's Colin T. Was that... We had so many people, and some of you have the same name. Oh, did we lose Colin? Where's he gone? There he is. Colin T. All right. Colin, you think you're gotta go? Okay, take it easy. I don't know whether that's our random task or whether it's a different Colin. But oh well. Glad you could participate. Log chart. What do we say here? Actually, you know what? I think the best is that's a different Colin. Oh, okay. Cool. I think actually if you're going to look at one of these studies, I think you got to look at that Brave New Coin Index. Yeah, there you go. Feigenbaum constant. Thank you, Daniel. I think you got to look at, and I think it's called the, is it BLX? Does this go all the way back to the start of time? Yeah. Well, this doesn't go that far back. Is this the one that's got the oldest and longest data? Because I think you really have to look at a chart like this. You got to see all of the data to really sort of fully appreciate a log chart, I think. So this is 2 days. What can we take out of this? One thing that I noticed when I look at these that sort of jumps out at me is I think they're actually really great for sort of identifying shelves. Come on, you. Oh, no, fudgicles. What time is it? Is there a point at which I really should just stop talking? I know people get pissed off when I do like 5-hour videos. Rob, you remember those? 3-hour daily briefs. I mean, I'm just eyeballing stuff here. Actually, off that M top there, eh? Something like that. So, ultimately the question here is, and again, I like to bring this sort of back down to a value kind of conversation, is what I've noticed with Bitcoin, because it has this built-in halving, is technically it's one of these kind of, it's a rise only market. I'm not quite sure how you describe it. I do like, I've been wondering what would happen if you actually did like Bitcoin versus M2. And would this actually be flat through this? Oh, interesting. So, maybe for Bitcoiners, this is probably a better chart to study. If you really believe Bitcoin is outside the system. We don't have that much data on this M2 though, so it's a bit tough to do much with that. Interesting how that gap, look at that, right down to fill that gap in. So maybe let's see what that last March low looks like. Is that it? Where'd the rest of the data go? Oh, there it is. So that is, these lows. So interestingly enough, in real dollar terms, we're actually down back against these lows. We dipped against those lows. So, I suppose when I look at this, I think narrow sideways channel. Bottom end of the range. Top end of the range. I don't know whether you want to go off of the top or just like that. Interesting how, on a logarithmic scale, these are almost exactly the same, Colin was talking about this recently, and, this is that same conversation that we kind of just started off the show with was, you tell me. I mean, let's call a spade a spade. Does that look like a W to anybody? Not really. I actually do like the idea that if we could somehow just consolidate in here and then W out to accept back above this range, I would love that. That would be perfect in my eyes. Also, too, if we want to think about when should this happen, if we just do really simple trend lines, really, I hate to say it, guys, and you're not going to like me saying this, but I get this sneaky suspicion. I'm not quite sure what low we should use, but maybe something like that. I don't know. Remember I did that bow tie kind of thinking. So believe it or not, I actually like the idea of us trading next summer. So that's in it like almost a year and a half, being right around these levels. I got a sneaky suspicion that this is basically our playground for quite a long time, guys. And also, too, remember that after the halving, that sort of floor is now going to be basically probably up in this area here, right? We had done a chart, and shout out to the gentleman. And it turns out that he actually watched the video recently, and I guess that's not that one. He was like, yeah, Brian, I'm still hanging in, but obviously cooling my jets with trading right now. But he had done this study. It'd be interesting to compare this to Shane's numbers. What is this? 10 cents an hour. I think that's a pretty high number. And if that's the case, then that means that number actually could be lower. I don't know. It's a tough one. I don't know whether these numbers are still correct. I remember when we were going through this bottom last year, we were talking a lot about this. But even at these numbers, and again, I can't comment on the efficacy of this. It's just a great study that one of the site members did back a year or so ago. And at that time, 26, call it around 3,000, something like that. It made a lot of sense why the market bottomed where it did. So if we think that nothing else has changed, of course, lots of variables have changed. But if I understand correctly, what's going to end up happening is after the halving, the difficulty changes. So in essence, the dollar equation is basically the same thing, but at the new price point. So, like $5,000, something along those lines. And the S9 miners, they're going to have a very, very difficult time surviving. So, 5,000-6,000 somewhere in there after the halving is sort of a new floor for Bitcoin. Wouldn't surprise me, And if we think about sort of as traders, especially investors, nanny nibbles, dollar cost averagers, if we get like short-term dumps below those levels, well, that's a buying opportunity. 6,800 right now. Now we're starting to get into, is it, if I paid 6,800 US dollars for a coin, even after the halving, is that cheap? I don't know. That's tough. All right. Yeah, no, understandably, Shane's just like, Brian, make sure you have your terminology correct. Halving means that the payout to miners falls in half. Difficulty should adjust, but I think if I understood, actually, I think it was that gentleman's article that I was making reference to earlier. He said that and I can't remember the specific term. Maybe we'll talk about it more. I'll reread it after Liam this afternoon. But in essence, there is an adjustment to the difficulty to make sure that people that are running like S9s and stuff like that, it's almost impossible for them to break even. I can't remember exactly how the terminology went. But yes, the payout does fall in half. So Shane says he's presuming that the difficulty will change when those old machines are turned off. So yeah, okay, that makes sense. So there's your sort of picture. Gave you kind of a fun sort of tutorial on this chaos theory. This will just be fun to see if it happens. And frankly speaking, if this actually is as usable as it is, Shane and I and Andrew are going to go off and trade Deribit options on this shit, and we're probably just going to leave you all, and we're going to go move to our tropical island. I'll keep in contact with Stuart and Julian, and they'll keep running TRI. And the problem is how do we get Chitty Chitty Bang Bang to float? That's the hard part. There's got to be some pretty damn big water wings. So, I mean, I'm fascinated. Let's just all for fun go this crazy chaos, and I don't know whether it's going to work or not. Who fucking knows? But this thing says April 13th, 14th. So let's make it a fun thing. There's, 50, 60, 70. Actually, Jesus. We got a better part of 100 people watching this right now. In essence, let's all just paper trade. We'll go have fun. Let's see if we can buy like an April 18th, maybe 19th, 20th, some sort of expiration date around there. And I don't know, just for fun, let's do both of them. Let's see what happens. We're going to paper trade. We're going to try and buy like maybe the 210 calls on Ethereum. For such a short expiry window, we should be able to get them pretty damn cheap considering the price is only $1.43. And on Bitcoin, 11,000. Let's maybe look at like the 10,500 calls, something like that, with an expiry on the other side of this blue line. And let's just see what happens. And the irony of it all is these kind of moves, if this actually does happen, like once every third time, or maybe once out of every 4 times, these kind of numbers could be so huge that even if it only works like 1 in 4 times, it's worth doing. So that's going to be sort of our fun little side assignment. Why don't somebody over there on YouTube remind me to, we'll just see what the hell happens. Now keep in mind, we might M out if we go and break these patterns, then the trade's off, right? It's just simple as that. It doesn't work. So, but let's see what happens. Only time will tell. In fact, actually, why don't we leave the video at that? I've been blabbing away here for a couple hours. Hope you guys feel as though it wasn't a it wasn't a waste of your time here today, and you got some sort of value out of this. As always, I suppose, if you do like the video, hit the like button, subscribe so you know when the next offering is coming out, and as always, be sure to ring Colleen's bell. So on that note, I'm going to get myself ready to try and have the best afternoon I possibly can with my son. I tell you, you can't write better fiction than reality. I live a very bizarre life right now. I only get to be with my son virtually. And unfortunately, he's nonverbal, so you can imagine what that's like. So we all have our own special, unique challenges that we have to work through in our own lives. You're not alone in your challenges and your hurdles. Each and every one of us has our own, sort of skeletons and axes to carry, or however that expression goes. All we can try and do at the end of the day, everybody, please, this is my message from JoJo to you. The only thing you can possibly do in this world is to try your best. That's it. That's the only thing that can be asked of you. Honestly, everyone, don't put yourself into a position where you are asking of yourself something that's just not realistic. All you can do is try your best. Try your best to be as good a person as possible. Try your best to be as good a trader as possible. Try to be the best human as possible. But that's the only thing that can be asked of you. And if at the end of the day you can honestly say, I didn't try my best, well, then you can be upset at yourself. If you tried your best, then nobody can fault you. So my promise to all of you is that I try my best. I fully acknowledge I'm not, Mr. billion-dollar trader dude. I'm just a guy that's in the market. Got a few things that I've learned. I've learned this thing called the process. And my promise to you is that I always try my best. Try my best to be the best Brian I can be. Try to be the best, teacher, mentor. I try to be the best dad I can be. And fuck, man, it's tough. So, PMA for the win, everybody. Hang in there. All you can do is try your best. And at the end of the day, God bless. All right, all the best, everybody. Bye for now.